Thanks for joining me to talk about our 2021 results. There's more to tell you about than we have time for, so I'm going to focus on a few key things. But before I do, let me remind you that silver is fundamental to a low-carbon future with the role solar will play. That means, according to the U.S. Energy Information Agency, silver demand for solar will be 500 million ounces annually, 5 times what it is now and half of what total demand is in all markets. Realize most silver is mined in China, Peru, and Mexico. Hecla has the United States' largest reserve of any mining company and produces more than 40% of all the silver mined here. We are the most reliable silver producer. Hecla also stands out in ESG with our safety record and being net neutral for greenhouse gas emissions for scopes 1 and 2 because we have such a small emission that we can buy carbon credits. What a year 2021 was, with the record revenue, record adjusted EBITDA, and the second highest in our 130-year history for reserves, cash flow from operations, and free cash flow. About 20% of the net cash flow was paid in dividends. But maybe the most significant achievement is the establishment of the new mining method at the Lucky Friday, called Underhand Close Bench, or UCB. We've been using it for a year now and believe it is safer and more productive. Our focus now is on how to further optimize the method, and we're even patenting it. We expect by 2023, Lucky Friday will be a 5 million ounce producer from 2 million ounces in 2020. This significant growth comes with little additional ongoing costs, so cash flows will be 2 or 3 times more than in the past. Greens Creek had another strong year as the mine produced 9.2 million ounces at an all-in sustaining cash cost of $3.19 per ounce, giving us about a $22 per ounce margin. Because of the margin, Greens Creek generated $185 million of free cash flow, and over the last 3 years, free cash flow generation was over $445 million. We also increased reserves by 12% to 125 million ounces, which are the mine's second highest since 2002. The Lucky Friday mine produced 3.6 million ounces of silver in 2021, with almost 1 million ounces produced just in the fourth quarter. 2021 production was a 75% increase over 2020. All-in sustaining costs for the year were $14.34, in line with our guidance. So this mine generated $33 million in free cash flow for the year. The Casa Berardi mine achieved record throughput as the mill operated at 4,187 tons per day in 2021. Our investments in the mill optimization continue to deliver results, with mill recoveries increasing 4 percentage points in conjunction with the increase in throughput. For the year, the mine produced 135,000 ounces of gold at a cash cost of $1,125 per ounce and an all-in sustaining cost of $1,399 per ounce. And so it generated free cash flow of $34 million. From 2019 to 2021, the mine has generated more than $100 million in free cash flow. While our investment in optimizing production has yielded results, we are seeing increased costs due to greater volumes mined and processed, contractor costs, and higher underground maintenance costs. Reserves have increased 16%, and the mine plan for just reserves is 14 years. Now, a little bit about the future. When we look at our business over the next few years, we anticipate seeing growth in production of silver due to the high-grade material we'll be mining at the Lucky Friday, coupled with the productivity gains due to the UCB method. With these improvements, we anticipate seeing the margins and free cash flow generation of the Lucky Friday expand, and we expect the mine will move to the best third of the cost curve of primary silver mine. And Greens Creek will continue to hold its position as a top-tier silver mine where it consistently delivered significant margins and free cash flow. On the gold side, we anticipate production over the next few years to grow slightly with our gold production from Casa and Greens Creek. We remain a very low-cost silver producer with our all-in sustaining cost guidance between $9.75 and $11.75. On gold, we're guiding to an AISC of $1,450 to $1,600 per ounce as we continue to work to improve operations at the Casa Berardi and also deal with inflation. Looking to capital, We anticipate spending approximately $135 million, which is slightly higher than in previous years, with the change driven, for the most part, in our investment in new equipment, increasing the number of stopes at the Lucky Friday. Costs and capital assumptions, including costs associated with managing COVID-19 and an assumed 5% inflation rate. We also anticipate spending $45 million on exploration and pre-development. About a quarter of that will be spent at Greens Creek and Casa. In addition to extending reserves and resources, both properties have programs identifying and testing new targets. In Nevada, which is about a third of our exploration program, we're going to focus on the 2 miles of the East Graben corridor at Midas and the completion of the pre-development drift and exploration drilling at Hollister's Hatter Graben. San Sebastian is testing for deeper mineralization near the mine infrastructure to try to expand the Hugh Zone type mineralization, as well as an area called La Roca. Our programs for Republic and Creed districts that have been on hold for a number of years will have some targeted drilling. In summary, we've had a great quarter and a year, and the upcoming year continues to be promising. And we're investing for the long-term future success at all of our properties. I want to thank you for watching, and if you have questions, please come to our website, www.hecla-mining.com. Thanks very much.